Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome. Once you join in, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So as you all know, today is Tuesday. Yesterday, the markets were largely quiet. We had a public holiday in the US, or what we basically call a federal holiday. So on this holiday, they basically celebrate the President's Day. It's done on the birthday of the US first president, George Washington, which was yesterday. So on this particular day, the stock market as well as the bonds market were closed. So we had little or no activity in the markets. So if you look at all US dollar pairs, indices, most of them were majorly moving sideways. So we didn't have a lot of liquidity nor any volatility in the market. And that basically explains one of the key concepts or questions we have been getting here, why we should focus on fundamental analysis. So as long as there's no news in the markets tend to be more quiet. And whenever there's news, then there's a lot of volatility, which creates trading opportunities. So that's why we focus on some of these information. So besides these, on the earnings side, we'll be expecting big earnings to be happening at the market open today. So one of the companies that will be reporting earnings will be Walmart, the retailer, the US retailer. At the same time, you'll be seeing earnings from Home Depot, and it's basically a retailer that deals with home improvement accessories. So both of them are basically representative of the retail sector in the US. So if they are doing well, it will be a very good indication about the retail sector in the US, as well as the purchasing power of the American consumer. So out of investors will be focusing on this, and of course there could be trading opportunities depending on the outcome of the earnings. So on top of this, we have a big shift in focus today. So a lot of forex traders will be looking forward to trade USD CAD. This is the US dollar traded against the Canadian dollar, and this is because we're expecting quite a number of news to be coming from Canada. So one of the information that we are currently waiting is Canadian CPI, or the Consumer Price Index, which is basically a broad measure of inflation within the Canadian economy. So a lot of investors will be following up on this, especially considering the last decision by Bank of Canada to hike rates by 25 basis points and keep them there. So they are not considering any more rate hikes as long as inflation keeps going towards expectations. So in this case, if there's a spike in inflation, then there could be more pressure on the Bank of Canada to hike interest rates, and this would strengthen the Canadian dollar. So besides inflation data, there will also be retail sales data from Canada. So investors will also be focused on this data since it will be released at the same time. So once the retail sales data is out, we will also get an idea of how strong the Canadian consumer is. So besides this, we have both flash services and flash manufacturing data coming from the S&P 500. And this will be reflective of three major currencies. One of the flash services and manufacturing PMI data will be coming for the UK, the other one for the Eurozone, and the other one for the US. So it's basically a measure of the trends in services as well as manufacturing, which basically considers a wide-based survey in both manufacturing and services sectors. So whenever you see expansion or growth in these indices, then it basically implies that there is better conditions for the services sector and also better conditions for the manufacturing sector. So investors will follow this closely in order to determine the strength of these two sectors for the three economies. So more importantly, will be the US. We want to know how manufacturing and services is performing, because if there is less orders in these companies providing manufacturing and services, then we'll be expecting a grayish economy going forward. But then if we happen to see an expansion, then we'll be expecting a red hot economy, and this could force the Fed to react in a certain way. So that's one of the key data points we're expecting for today. Then going forward, we'll also be looking at geopolitical risk. So it has become quite a concern since yesterday, when President Biden made a surprise visit to Ukraine and met with the Ukraine President Zelensky. So after this meeting, we are expecting a response from Russia's President Putin. So he is expected to issue a speech at exactly 12 midday today. And this will be in response to Biden's visit to Ukraine. So in Biden's visit, they also did a speech where Biden promised to continue supporting Ukraine for as long as it takes. And this might cause Russia to react. And this basically increases the geopolitical risk within the European region. So besides these, there's also the geopolitical risk that China may now start offering direct support to Russia. So the Secretary of State, Antony Blinken, told China's top diplomat, Wang Yi, at the Municipal Security Conference that they had information suggesting that China was planning to provide lethal support to Russia. So this will be one-of-a-kind support. China is a big economy, I would say second to the US. So if they're offering lethal support to Russia, then we may expect investors to readjust their expectations. In this case, taking the conflict between Russia and Ukraine as much bigger and having far much wider implications. So Russian news outlets on the same matter reported that Wang Yi is expected to visit Moscow on Tuesday, this is today, and possibly meet with the Russian President Putin. So this is a new development in the market as well as the geopolitical risk. So we might be seeing the market react to this information. So top in terms of what's happening in the markets is that the BTC or Bitcoin managed to break out yesterday and now is moving higher, well on course to getting to 25,000 and testing the $25,200 level. So that's it. That's the market snapshot that we are expecting for the day. And now, if you look at the charts very quickly, I'll start with Bitcoin. You can already see the chart here. So we had drawn this triangle yesterday to try and estimate the movement of Bitcoin. You can see the swings are getting smaller and smaller. Eventually, Bitcoin managed to break here at around midnight, and now this rally has continued. Currently trading at 24,943. We are almost testing this resistance here, which is around 25,200. So it's a very strong momentum indicating continuation of the current pattern. So we could be seeing the price of Bitcoin continue to move even higher. So besides that, yesterday we had mentioned a potential trade that could be identified in a FTSE 100 or the UK 100 index. So I'm trying to find that. Yes, this UK 100. So during the session yesterday, we were basically looking at this. So after this, the market did not find enough energy to keep moving down. We didn't have sufficient sellers. So the market traded sideways from that moment going forward. And today you can see another attempt to push lower, which is currently being met by support. So currently, there's a very strong bullish run happening in European indices, not just the UK 100. And eventually, we'll be expecting to see some further downside. So already, some big investment banks, such as JP Morgan Chase, are basically analyzing the situation and saying that this strength may not continue for long. So there is potentially an opportunity that we'll be seeing these indices trade lower. So UK oil had an extended drop. This was 2 weeks ago. 2 days ago. In trading, this was last day. So we managed to identify this. I remember analyzing this as a strong support for UK oil or Brent oil. So after this, we managed to see a very strong response here. Then yesterday, some continued momentum upwards. Then early in the morning today, market managed to pull back down. And now we are seeing some further continued strength in Brent oil. So there is a good chance we'll be seeing some further upside in Brent oil. So potentially getting to this upper trend line here. So we can already see that the expectation is now adjusted. So potentially we could be seeing the market now not focusing on that end, but now focusing on this other end. So the target is around 84.4 and even higher. And this is for intraday trading. So gold clearly moving downwards. You can see the different levels it has been making here. So some consolidation break, and now after trading here, managed to make a big dip here before bouncing. So if you look at the forward chart and you notice this was a key level support where the market managed to bounce. But then after the bounce, you can see the market did not hold out for long, and now it's pushing further back downwards. So the gold price is no longer acting as the inflation hedge. In this case, it's being treated like a risk asset, which is having some correlation with the S&P 500, the NASDAQ, as well as the Dow Jones. So the expectation here is that gold continues pushing down to retest this price level. So an expectation for gold to move further down towards 1825 is in order for intraday trading today. So that's it for today. It's 11 a.m. You all know what that means. So hi, Stallone, Apollo, Abdirahman, Chris, Walter, Felix. Thank you guys. Thank you for your responses. So I have one question here. Your thoughts on today's PMI. So I am expecting that PMI is increasing. This has been the surprising thing that despite the central banks getting very aggressive with hiking interest rates, the economies have remained significantly strong. So we have seen the US consumer remaining very strong despite having consumer debt going to record highs. Also, the appetite for consumption is still really high. So as a result of these, I'm expecting that the market will continue showing strength, and this strength will be viewed in the PMI. So expect higher services PMI. Manufacturing, I expect some sideways momentum. So I don't expect a higher manufacturing because companies are not looking to expand into weakness. But then for services, I expect a big surprise to happen in the markets. Also, in addition, if you count the number of jobs created in January, then it would make sense that services takes a big chunk of that. And in that case, for US services, I expect a big expansion. So yes, I also expect some level of expansion in the Eurozone and the UK. But when it comes to manufacturing, I don't expect a big jump from the expectations. So thank you very much, guys, and I hope to see you on the next session. Another question here, when do you expect a recession to start in the US? I would already say that we're already in a recessionary environment. It's only that the key data points that a lot of investors focus on have not been pretty evident. So as long as the US consumer remains to be strong and credit card debt continues rising, then we'll continue to seeing some surprise strong economic data, but eventually this will come to an end. So already inflation is still very high, so people are paying very high prices for consumer products. Companies are still reporting good earnings, and remember, these earnings are from last quarter. So earnings for this year have not been factored in yet, whereas we have a lot of SP 500 companies revising earnings downwards. So perhaps we start seeing the actual data showing a recession in maybe the third quarter of this year, but recession is actually happening this quarter. Canadian dollar strength, that well depends on the data, but there's a good likelihood I will be seeing some weakness rather than the strength. So if inflation keeps moving as projected and Bank of Canada is not hiking rates, we will be expecting some weakness in Canadian dollar. So unfortunately, our time is up. So perhaps I will be doing something more on the Telegram group. So Nthenge, I hope you're part of the Telegram group. So just in case we need more analysis on this, I'll be sharing the link. So explain why BTC and DXY are moving in the same direction. Of course, inflation hedge. So a lot of investors are looking for a place to hedge inflation. On one side, the dollar is basically one good inflation hedge as a result of the high interest rates and the promising short-term bond market. And at the same time, when you look at the Bitcoin and how it has performed, then there's a renewed interest as Bitcoin is being traded as a commodity. where the factors being considered here are both supply and demand. So with increasing demand and lower supply, then we are seeing commodity-like performance this year. So thank you guys, and I hope to see you on the next session.